Welcome to Bike Bond's final presentation. My name is Phil Pick, and I'm the president.
I'm Emiliano Acuna. I'm VP of Manufacturing.
Hi, my name is Tingting. I'm the Vice President of the Finance and Accounting.
Hello, my name is Stephani Guzman, and I'm the Vice President of Human Resources.
Bike Bonds retained most of its original strategy, however, after observing competitors achieve success by opening up more sales channels and putting more capital into marketing and environmental studies, Bike Bonds decided to alter its original strategy to become more competitive with its competitors. Bike Bonds achieved overall market share of rank number one, translated to 34% in market share, and notably, Speed Brand achieving 40% market share, ranked number one of the Speed brands. The overall corporate strategy of Bike Bonds is to earn customers' business and trust, deliver value to all stakeholders, not just the business. This includes the customers, the environmental issues, the suppliers, the community that the business serves. Bike Bond's strategy was also to achieve healthy cash flow by being financially conservative. With performance reviews from marketing quarter 4 to 6, there was a significant increase in marketing expenditures, notably R&D costs, to address the customer complaints regarding Bike Bond's carbon fiber bike frames being rugged and potentially injuring customers. Even though Bike Bond's strategy was to be financially conservative, to protect the customers and to protect the brand, Bike Bonds decided to spend over $860,000 to produce carbon fiber bike frames that are enriched, lighter, and stronger. Bike Bonds continue to offer rebates for Bike Bonds brands, as Bike Bonds believes in providing good products with reasonable price. Bike Bonds decided to adjust sales channel strategy to become more competitive like its competitors such as Pedal Pros and Pedal Paradise. Bike Bonds opened the stores around the globe in Rio de Janeiro, Bangalore, Amsterdam, and the original one in New York City. To continue performance review for quarter 4 to 6, Bike Bonds observed the importance of positive relationship between reputation and financial performance/sales. Bike Bonds observed its competitors achieve high sales revenue and gross margin by spending capital into environmental studies and being a good neighbor, notably Pedal Pros. As a result, Bike Bonds spent expenditures on environmental studies and employee involvement surveys to provide air filtration system in manufacturing facilities to filter out epoxy resin and carbon whiskers, and notably provided protective gears such as gloves and clothing to help prevent illness with its workers and community. Bike Bonds decided to spend capital in employee involvement survey to provide employee morale for its employees. And lastly, increased the number of brands to increase sales revenue while keeping all of its rebates. Up next is Emiliano in manufacturing.
All right, everyone. So I'll be talking about the manufacturing performance for quarters 4 and 6. So if you can, everyone pay attention to the chart to the bottom right. Just want to go over the results for each quarter. So for quarter 4, we had 2,600 units possible for fixed capacity. Our operating capacity was 1,300. Our overall demand was 1,129. And we did have a stock out of 162, which left us with producing 967 units for the quarter, with a 74% worker productivity. For Q5, we did not raise the fixed capacity. We kept it at 2,600. Our operating capacity did go up to 2,275, and our demand was 1,808. Although we did not have stockouts, we did face ill will for this quarter, and that's why we stayed at 1808. Our worker productivity did go up by about 6%. For quarter six, that's when by that time, we would have two more stores, so a total of four, and we did double our capacity to 5,200. For our operating capacity, we raised it to 4,875. Unfortunately, we did face a stock out of half of that. So our total demand was 8,620 and our stock out was 4,411 with a total of 4,209 produced units. Our worker productivity did go up to 86%. And now I want to talk about actions against business plans and justification. So initially we did start modest as far as investing. We didn't want to invest too much in fixed capacity and not use it. So for the second half of the simulation, as you can see, for the last quarter five, really going into quarter six, we did double down on that. Which is although we predicted we did not predict to have such a high volume of 8,620 for the demand. So that definitely did hit us. For significant events, low worker productivity was one of the big ones that really affected us. So if you look at the graph up to the right, you can see that our fixed capacity throughout the whole simulation was either above or above, more than above or above demand. For operating capacity, that as well stayed above the demand up until quarter five. But as you can see, our units produced definitely either stayed at demand or below demand. And we noticed that this was due to low worker productivity. So as we went through the simulation, we saw that we needed to invest more in compensation packages, and then there's also health regulations that the workers really wanted us to focus on. So yeah, that's one of the things that really affected us during the whole simulation. For the goals relative to KPIs, as I mentioned, you can see that our fixed capacity and our operating capacity definitely for most of the simulation stayed above the total demand needed. And with that, I will pass it on to human resources.
Human resources. Before we begin, I want to talk a little bit about what the mission of the company was, that we always wanted to provide the best benefits and we wanted to be competitive in salaries. We wanted to continue to grow with the market. As we did that and throughout the quarters, and that's something that I want to highlight and demonstrate throughout this presentation. So as we begin with the compensation package for production workers, in quarter four, it was 11,500 when the average was 11,000 to 12,000. So right there in the middle. In fifth quarter, it was we offered 12,250 with the average being from 12,000 to 13,000. And then in quarter six, something to highlight is that the competitors' average was 18,000 to 18,500, and we were one of the highest, so that was really rewarding to see. For production supervisors, in quarter four, we offered 16,000. The average was 15,500 to 16,000. So once again, being able to be one of the highest. In quarter fifth, we fell a little behind our we offered 16,250, which that was the lowest, to 17,500, which was what some of our competitors were offering. In sixth quarter, we were able to offer 19,000, so right there being an average between 18,000 to 20,000. In sales and force, in quarter four, we offered 18,500, which our competitors offer 18,000 to 18,500. So something important to highlight that we were one of the highest as well. When it came to fifth quarter, 19,000 was what we offered, and the average between them was 18,500 to 20,500. So not being last, but right there in the middle. And in sixth quarter, we offered 20,000, which our average was 18,500 from our competitors to 21,500. So being really proud of what we have accomplished to the quarters. So just even focusing on us as a company, you can see the progression from quarter four to quarter five in each of the categories for each workers' compensation. So with that being said, I think the salaries reflect on the satisfaction. So if we focus on bike bonds, our company, through the quarters, you see that. So for production workers was 79.2 in quarter five, it was 85.0, and in quarter six, 90.1%. So once again, the increase, it doesn't go down, it continues to increase as we're making salary increases as well as satisfaction that our employees are happy. When it comes to supervisors' compensation in quarter four, it was 77.4. In quarter five was 87.7. And in quarter six, it was 91.4. So once again, the increase slowly but surely is increasing. And for sales and force in quarter four, it was 74.9. In quarter five, it was 83.6%. And in quarter seven and quarter six, ended up being 87.1. So once again, the increase between each quarters that our competitors they do, but it's smaller increases between them. So we accomplished that goal that we wanted as we were improving. We wanted to see improvement in satisfaction. The next thing I'm going to talk about is that our employees said, hey, it's not only about the salary, it's about what about my health? What about my pension? What happens to me after? Am I secure in this company? So that's what we focus on. We didn't want to just focus on the salary, but we wanted to make sure our employees were happy. So we offer competitive benefits. So for bike bonds, our health benefits we offer in the fourth quarter already an expanded coverage, which is something that you can see among companies normally, except for one company that offer full coverage in fourth quarter. But we were able to offer the average of 2 weeks of vacation and 3% of a pension, which was the average between the different companies in quarter five. We were able to increase our health and benefits package, which that was our goal to comprehensive coverage, 3 weeks of vacation, and 4% of pension. So the increase in benefits and the well as increase in pension. And in quarter six, we accomplished one of the things that we wanted to increase the pension to 5%, as well offer comprehensive coverage and vacation. So that's something that we did do through the quarters, through our different sectors. In some of the workers, we offer full coverage. So through all of them, you can see an increase, which that led to employee morale that in quarter four, we had 66, in quarter five, 72, in quarter six, 79. So again, the increase surely but steady throughout the quarters and in competition to our competitors. So in quarter four, we were one of not the lowest. So the lowest was pedal pushers at 65, but we were second, bike bonds at 66. So we did make a comeback throughout the quarters, being able to push through it. So at the end of the quarter, so we were at 79 and pedal so we were one of the third ones. So number one was Pedal Paradise, then it was us, and then lastly was Pedal Pushers and Carbon Cycles at the same. So what does that show? That shows that we are committed. Like I said, if we believe our company is for families and we want to invite families, we want to treat our employees with families. And that's something that throughout the quarters we want to include. We want to listen, okay, not only salaries, we want benefits, we want this, and be able to offer different things such as professional development. The normal per person was 1,000. Towards the end of quarter six, we were able to offer 2,000. So seeing those little things that do make a difference, being able to offer bonuses and incentives for selling bikes, that we always try to go higher than the amount that was suggested to know and to show our employees that we value them and they are family, that without them we wouldn't be able to run a company.
Now let's take a look together at our financial performance for quarter four to six. It may be a little bit upsetting to see the negative number as the net income for quarter four and five, but I want to assure you that this is something actually we planned in our earlier business plan due to the increasing expense we spent on the marketing as well as some investments in future. The good thing is that we always keep an adequate cash balance for all the quarters and also a minimum financial risk. We did take some actions to reinforce the business plan. So we greatly increased costs on investments in future, like we opened new stores to acquire bigger markets and also invested in R&D to further improve our product's feature. When it comes to the departures from the business plan, we do made some adjustments. We gave up some of our gross margin advantage in Q4 to 6. The reason is that we're surrounded by very aggressive competitors who have spent much more money on R&D before. Now they enjoy the benefits of have better product features, but at the same time set their price pretty low. In response to that, we give up some gross margin and also slightly lower our price for all brands, offer more rebates. And also another reason for our lowering the gross margin is due to our decision to increase the employee compensation and benefits to have a better productivity.
Coming over to the conscious capitalism, there were 3 main focuses that Bike Bonds wanted to focus on, which is protecting care for Bike Bonds workers, protect the environment, and show commitment to sustainable business practices. Some of the actions that was taken in terms of that, Bike Bonds introduced protective clothing for manufacturing plant workers, as well as also introducing air filtration system to filter out toxic epoxy resin and carbon whiskers so that we can protect our workers and the community. The final capitalism that the Bike Bonds wanted to focus on was to also be involved in more community projects, making an impact to build that relationship. Some of the investments that was taking place, such as having bike paths and pushing for to be more involved in the educational purposes, and also having a hand in building parks as well. There was also made an investment in supplier relationships to reward suppliers and maintain a good relationship with them as well.
Now it's time to do a good summary about the goals we achieved and also some goals we missed for the past 6 quarters. We do achieve a lot of goals, including the manufacturing productivity. Also, we made our promise to make a profit within a short time and maintain through operation, which we did. For all the quarters, we do maintain enough cash balance to ensure financial stability, and also we grow in a sustainable and stable way. There are many reasons for our achieving the goals. So the management team is always very flexible and always adjust the strategy quickly and on time to the competing environment. We are always prudent about spending money and very cautious to lend money for aggressive plans like market expansion. In this case, we're trying to minimize the financial risks. However, there are some goals that we missed for the past 6 quarters, which include a good human resource management. The reason is that the executive team didn't realize how important it is to provide a compensation package that is competent enough in the job market to our employees. So for the beginning quarters, we were too cautious to provide a good package to them, which made it hard to catch up with the employees' satisfactory score for later quarters. Also, the management team was kind of didn't do much work for the long-term perspective goal, which is to defer the profits to build a strong competitive position and also the long-term investment in future. Of course, the reason that we missed this goal is because we were overcautious about spending money for the very beginning, which we realized and improved our strategy later on. Also, we were very hesitant on market expansion for Q1 to 3, while other competitors have been very aggressive. They invested a lot of money on the R&D, opening stores, and invading into our current existing market. In this way, we fell behind on market share for a certain period of time, but luckily, we also adjusted our strategy to do a quick pickup. Of course, the lesson for us to learn is that besides focusing only on the current profits, we also need to focus on the future, which will bring the long-term benefits to the whole organizations, companies, as well as the operation. All those are good lessons to take away.
Okay, now we'll be talking about preparations for the future, competition, and success. So there's a few things that we are preparing for as far as financial performance. We're trying to focus better on short-term and long-term investments. For market performance, we're seeking for a bigger market share and trying to avoid stockouts. For marketing effectiveness, we need to pay closer attention to customer needs and trends and really focus on what we're developing for the customer. For investment in the future, we're hoping to plan ahead and make investments that will benefit us in the future. So investing in manufacturing more or opening more stores earlier, investing in more employees, things that we saw that set us back this time around. For human resources, we're looking to improve worker satisfaction and improve worker productivity rate, which we saw was one of the biggest things that were actually holding us back in manufacturing. For asset management, we're looking to diversify sources of income and get rid of any idle fixed assets. So things that weren't beneficial to us or are really helping us make more money. For manufacturing productivity, we're looking to continue to invest fixed capacity, operational capacity, and to be able to sustain above average working conditions for workers, which is something that we saw was also affecting the worker productivity rate. So as we invested in those areas, we saw improvement in the productivity rate, which went from low 67 to high of 80.7, I believe.
How did your team benefit from participating in the simulation? In many ways. One of them was being able to gain valuable experience in the making data-driven decisions. It's only not one thing that you change, it's everything that falls into it. If you change a feature in the bike, maybe you need to change your advertisement. If you change your advertisement, is it a different price? Is it a higher price? Are you making a 2.0 bike? Is there a different complete bike? Are we improving different models? So being able to gain that experience that it's not only one thing that you change, everything interconnects to make a company run. And it's something that even after this class, we're gonna take that if a company is functioning, that they're doing so well in different departments in the human resources when it comes to salary, when it comes to professional development, that it's not just about selling the product, but everything that takes to run a company. If employees are unhappy, then your productivity is done. So being able to gain that valuable experience in decision making. The simulation allow teams to effectively respond to competitors' actions, not knowing sometimes that our approach had to change, being able to respond to them saying, hey, you know what, you made a better bike, but it's still lacking this. My bike has this, being able to really understand where their point of view was and the differences that we were going to change. And it also helped us build a better teamwork. We got to work with many MBA students in this project. We got to learn from one another in our different fields, bring in different perspectives, talk about different conversations, this works in my company. I think we should offer this salary. This advertisement, I think it would be better. Let's increase this, and that to up our chances and being able to work as a team to solve issues and challenges and success to celebrate together. Lessons that you can take into the business world. I think everything, like I said, like knowing that a successful company has different many components, but also the need to adapt to business strategies quickly. We at the beginning had a conservative approach, and knowing that we needed to change that because we were falling very behind. So being able to change that in third, fourth quarter to a more aggressive market actions when necessary, saying, hey, you know what? It's not about the money that we need to invest in order to get a profit out of it. So being able to learn those different systems and different ways to continue to grow the company, as well as the simulation emphasizing critical role of making marketing effectiveness and the importance of aligning products with the customer needs. As I mentioned, like it's not what we want as a company because we can want this certain bike, but it might not sell. What is the customers asking for? What are we giving them? Why are we not? What do we need to improve? And really focus on the customers because they are the ones buying it. Really listening to everybody in our run does not only what we want, but what does the market is asking for and be able to provide that.
All right, everyone. That concludes our presentation. Thank you.